it is a privilege, isn't it, to try and help shape people's financial plans and futures, and to be entrusted with that wealth creation, wealth generation, wealth preservation. That is a serious and important obligation that we run. But all of that creates stories. It changes lives. It helps people. That purpose isn't lost on me and the colleagues.
Hi, I'm Belden Menkus. Welcome to the Purposeful Strategist, the podcast that shifts the conversation about purpose and strategy from what organizations should do to what business leaders are doing and what they've learned along the way.
My guest today is Dean Proctor, CEO of 7IM, an award-winning investment management firm. Dean first joined the podcast in April 2022 when we discussed what strategy and purpose mean to him and what they look like at 7IM. We also discussed the importance of company culture and equipping oneself for a more modern workforce. Since we last spoke about 3 years ago, 7IM has experienced tremendous growth. In addition, they have a new majority owner. I'm particularly interested in hearing about 7IM's evolution and the impact so far of that new ownership. Dean, welcome back to the Purposeful Strategist.
Belden, good morning. Good to speak to you again.
Just to get us started, I wonder if you give me a sort of a thumbnail sketch of 7IM's evolution since you were last on the podcast and an update on where it is now.
Yes, of course. So when we last spoke, about 3 years since I joined the firm. So I joined the firm in April 2019. The midpoint we spoke was interesting. We'd obviously been executing our strategy that we outlined in the third quarter of 2019. But in the summer of 2023, we went through our own sale process, culminating in Ontario Teachers' Pension Plan becoming our majority owner on the 18th of January 24. When I joined 7IM, we were about 325 people and around 11 billion of assets, which was probably 80% of that point intermediary focused. As of today, give or take, a reasonable degree of movement following Mr. Trump's interventions, we are just shy of 30 billion of assets and about 850 colleagues. So nearly 3 times the size that we were 6 years ago. And that has been achieved through organic and inorganic activities. And we have very clear ambitions to the December 28 5-year business plan that we wrote summer 23. So we know what we're trying to achieve. And now I guess it's our job to execute on that business plan.
You talked about it being a mix of organic and inorganic. What's the inorganic growth been from?
So the inorganic growth's largely been focused on the acquisition of high quality advice firms. We have expanded our distribution and now have around 180 financial advisors that work in the firm. Therefore, we are directed to client, direct to investors.
If I've got it right, you've got both a B2B2C and a direct-to-consumer business model.
That is correct, yeah. So the heartland of the firm, the history of the firm dating back somewhat 24, 25 years ago, was very much in the intermediary space, where 7IM, as the title indicates, was set up as an investment management provider. It started out with the provision of funds, so OICs, into the financial advisory community, and it still very much does that through its services. It expanded then into platform, where we still have today our proprietary technology. So we are fortunate to be the custodian of about 18 billion of assets on our platform, where we naturally safekeep, transact, deal, and report those assets for financial advisors around the UK. So I would suggest we're about 20 billion in round numbers in our intermediary business and approaching 10 billion, as you referenced, in direct-to-client private wealth businesses. That's an approximate composition of the firm as we sit today.
Mm-hmm. Do you find those two channels are sort of in conflict with each other, or do they complement each other?
Yeah, I think they're complementary. We learn a lot, of course, don't we, from our direct client interactions that we seek to replay into the products and services we provide to the financial advice community. One thing I would definitely say, though, is that in a business world where there is quite a lot of overlap, and sometimes you can be both a provider and a competitor with certain firms, we are a highly professional outfit and we respect the boundaries by which we operate. So we do our absolute level best to make sure that for companies and firms that are good enough to give us their business, we clearly don't tread on their toes in the course of our own growth. So I think there's great insights that we learn from both the channels we operate, and we seek to utilize that insight to continue to enhance the proposition and services we provide.
As you've mentioned, you've grown a fair amount. And I know from our previous conversation a couple of years back that your values and kind of purpose are very important both to you and to the business. How do you maintain that, let me say, strong culture? How do you do that when you're bringing on new people through acquisitions, and I'm sure through just the ordinary hiring that any business does?
Yeah, I would say this is one of the greatest leadership challenges, Belden, if I'm honest. We've continued to utilize our phrase of succeeding together. But of course, when you add new colleagues to that mix, you've got to constantly reinforce those messages and then embrace and exhibit those behavioral value traits that we've all signed up to. And we work hard at that. So what I think has probably happened and is still happening is that the succeeding together now has, can we just say, 7 wide set of words that we seek to live up to. But we have made that increasingly more purposeful at a business and a functional level so that they can all recognize with the vision and purpose of their areas of work, not just the group level messages. And that obviously they connect, and we're all trying to achieve the same things. But there are, subtle differences if you work in a client-facing business versus, to say, a risk function or a finance function. But we very much embrace this fact that, we're here to support one another to deliver for our clients. And we don't want to be divided by functional names and barriers between serving our clients. So that, I think, is something that we must retain.
How are you going about that?
We're currently actively engaged in designing this with what I would describe as new communities. So we have financial advisors that could be based in the very north of Scotland, in places like Elgin and Inverness. We have financial advisors based in our Midlands office in Solihull, and then a fair number in London. They're also working remotely. Those colleagues are doing similar jobs for similar clients. And we want a community where we can help one another to deliver the right outcomes for those clients. And, the delivery of financial advice doesn't get any less complicated, what with, regular changes to regulation, taxation, etc. The sharing of those experiences and skills hopefully means that we're continuing to learn from each other to deliver those desired outcomes. And we're trying to make sure that those communities are regularly connected and support one another, in our master goal of succeeding together.
I know from previous discussions, your career includes time with some really huge organizations, and that you've kind of decided you like the feel of a smaller organization. It sounds to me like you're sort of trying to grapple with that as we grow. How do we still keep a bit of the small company feel? Is that part of what's in there? And if so, are there other things you're doing around that?
Yeah, I do think it's one of the challenges. So as a medium-sized firm, you of course want to have the quality of governance and frameworks and controls that rightly exist. But likewise, you don't want to lose what I think is an important DNA and spirit and sense of client-first behaviors that are really exhibited by colleagues. That becomes a differentiator from sometimes getting lost inside a large organization and wondering on occasions, are you speaking to real people? One's personal experiences aside, I think it is possible if you keep connecting people and you keep revisiting, why we are here, what our purpose is, what we're trying to achieve together. And, at the heart of all of that clearly is colleague and client. And the succeeding together slogan isn't just about the teamship inside the business. We believe that translates to how we work with our partners, how we work with our clients, and those collectives all come together to deliver best outcomes. But it does take continuous efforts to keep reinforcing those key attributes. It's attainable at the size of the firm and the ambition that we've got. Whether that's achievable when you're working across 50 different countries, 80 different locations, hundreds of thousands of people, frankly, by experience, I doubt it. But we want that DNA to continue inside 7IM.
Succeeding together it's a simple message, but it's a great message. It sounds like you're just having to keep saying it over and over and over again. How do you keep the sort of excitement about that when you've said it for the 10,000th time?
What you've got to remember is that you're often talking to colleagues that are new to your firm that you've just partnered with or have just joined. So those messages do need to get repeated. Maybe the couple of techniques that you learn is you do it through stories, using examples and compelling stories that demonstrate what we're all about. I think most people inside 7IM probably know that I'm quite a large reader of strategy and management books. And last October, I was fortunate. I did about 10 days at Harvard. And one of the lecturers there was a gentleman called Hubert Jolly, who wrote a book called The Heart of Business. And that is all about purpose and embodying that inside the firm. So it had personal meaning and stuff. And those things just give you fresh ideas, Belden, don't they? You know, like maybe a slightly different spin that brings it to life for another group of colleagues. So it isn't always just about simply saying the same thing. It's about trying to bring to life the very, essence of what succeeding together is through different stories and things.
It may be the same message, but you've got to keep finding ways to make it new.
Yeah.
When you say stories, I assume those are often stories of real things that have happened in the business.
Yeah, exactly.
I know 7IM has a pretty strong set of commitments around sustainability, particularly in terms of sort of decarbonizing your portfolio. How's that going, and how do you integrate all of that into the day-to-day?
This is definitely one of the areas of which, frankly, I am probably least involved in, but most proud of. So there's a few areas inside the firm where things like our approach to diversity, inclusion and belonging and sustainability, what makes me most proud is that it hasn't taken executive intervention. It's been driven by colleagues because they're passionate about the subject. And then those colleagues have developed a larger group and a larger following inside the firm without, somebody that might have a nice title instructing it. And I think that is the beauty of 7IM in many ways. So this subject has developed in multiple different ways, but mostly originally came about because we had a 15-year sustainable balance fund product of which had got great history. But what we really wanted to do is to make sure the principles of that were then embedded right across our product range. And that does take some time. I'm sure we've all heard of these phrases, the different shades of green, as you're seeking to embed and reshape your portfolios. But the investment management team in particular have been working on that now for a number of years. I suspect over the course of the next 1 to 2, we will see that completely and utterly deployed right across our fund and model range. Aside from all of that, of course, though, you've got your internal practices and the things that you work towards decarbonisation, etc. And the group does some fantastic things on that. We look at whether we should be on trains, not flying when we move around the country and all of those good stuff. What I would generally say, though, over the last perhaps 12 or so months, the subject has got a little bit more challenging for two real reasons. One is at a macro level, countries and particularly politics have pushed this further down the line. And I don't think one can ignore that. That does have an impact. And then the products themselves, somewhat as a consequence of that, have not delivered on a returns basis for investors. And, ultimately that has to be a marker, doesn't it? People want to invest in the right ways, and I'm sure reflects their views and beliefs, but still expect, a suitable return. And some of those funds have not been at the top of the chart over recent times. So one hopes that recovers, because we all know we need to look after the world we live in and the future generations, etc. But it has been a bit more challenging. From a firm's point of view, we've got a lot of activities that point to this whole subject moving forward, from the provision of products to sort of then the way we run the firm and how colleagues, operate, etc.
One of the things that, at least in my mind, is kind of mixed together with that issue is the whole active to passive kind of balance. How does all that play out in what you're doing?
Yeah, I mean, this has been an interesting aspect of our sector, I guess, now for a decade plus, where up until perhaps a couple of years back, if one was in a US dominated portfolio on a 10-year US run, you would have probably been reasonably well returned. That dynamic has clearly changed quite significantly in recent times. As a house, we are always at pains to talk about diversification and not to be over concentrated in one particular asset class or geography, etc. I would definitely suggest that active management has a role to play, particularly in a world that's experiencing the volatility that we're in now. That's not to say, though, that in investors' portfolios there's not room for passive investments. Of course there is. It's not to say that these pressures have made dramatic changes on the price points of which the industry is operating at now, and it has. All of that has dramatically reduced, the end cost to investors, which is a good thing. So it's a very changing marketplace, but I think it would be unwise to dismiss active management from our thinking and our offering and our portfolios just based on that window. That isn't quite the right lens in my view.
Consolidation in the whole wealth management space seems to be accelerating. Just curious on your thoughts about, what's driving that? Is it likely to continue? And what risks and opportunities does it bring for 7IM?
I think if you look at the costs of operating, the costs of capital, the regulatory burden, that is increasingly difficult to do in smaller entities. That doesn't mean that smaller entities won't exist, but it may mean that they find themselves homes inside networks or with consolidators that looks a little different than just running on a standalone basis. I'm generalizing, but of all the financial advisors that you get the pleasure of meeting in the business that we do up and down the UK, the one thing that seems to run true in everyone is they absolutely want to do right by their clients. There's often long-standing personal relationships based around towns and communities that they operate in. They want to do right by their clients, for sure. In order to do that, though, they want to be with their clients, dare I say, not spending time on operational and administrational things, of which somewhat in our industry now that burden has increased. So how they dispense of those duties but do it properly, I think is going to lead to ongoing consolidation. The other thing we can't ignore is basically the sort of the age profile of advisors in the UK, of which, we need to attract younger and more diverse audiences of financial advisors to reflect the communities and clients that we serve. So that is also changing. Retiring advisors do need a place to safely hand over their clients. That drives a degree of consolidation, but I think the trends are clear. I am sure that we need more financial advisors in the UK, but I'm also sure that those will be coming from fewer and fewer regulated firms through consolidation.
One of the issues, and I know it's a slightly contentious one, is the whole sort of boundary between guidance, advice. Is the regulatory structure set up in a way that's going to allow large numbers of people to get the advice they need at a price they can afford and still allow somebody to make money at it? Just wondered if you had any thoughts on how all that's playing out.
Yeah, look, I think what's really good is that the regulator is obviously commissioned and is now very active in the advice guidance boundary review, with hopefully the early findings and direction of that not too far away from being released. And the case for that can't be clearer, can it? Whether one says there's something like 12 million households in the UK that would benefit from financial advice but can't get or don't know how to get access to it, or whether one says only 9% of people have received financial advice in the UK. Those stats are compelling, aren't they? How are we going to get there? Well, it sort of links to the previous point, is that I do think consolidation will help, because we need to lower the cost to serve in order to reach those communities, those segments, that audience. A lot of it will be led by technology in a different, more advanced digital way, without using the human element of advice, but definitely supported by more technology in order to reach those new audiences. And I think it's a priority for the regulator, and frankly, it should be a priority for firms like ours over the course of the next, few years, to ensure that this complicated world of managing one's finances and planning for retirements and how we provide wealth to our children and grandchildren, financial advice is a wonderful thing, and it needs to be made accessible to more.
So kind of connected with that, how did you see AI changing the wealth management landscape? And what's 7IM doing to, I wouldn't even say stay ahead, but to stay in the right place, and particularly not to lose the human touch?
So the combination of a relationship with a human supported by technology, I think, is crucial to the conversation we're just having. What we've been trialing is basically technology and AI solutions that make the advice process, particularly things like meeting notes, suitability report writing, more effective than a human still scribbling on A4 pads. And we are seeing quite a lot of what I would describe as quite transformative improvements in that advice process. We did make a public announcement a few months ago saying that we've agreed a partnership with Avini, which is an AI tool that listens in the client meetings and captures very accurately meeting notes and is helping convert that into, client reports. Now, of course, that does still need the human oversight, because they want to make sure it reflects the conversations and agreements and recommendations that they've agreed, but it is transformative. What that then means is that hopefully we can use those technologies to reach that larger audience that we referenced before, and we can do that with greater volume.
Kind of shifting the focus a little bit, looking at you in your role as the CEO, do you sort of have a personal purpose or a mantra or a kind of guiding vision that is the bedrock of your own leadership approach?
I do think that's evolving too, really. So, I guess if you've been lucky enough to lead firms for the last, dare I say, 15 years, maybe since I first became a CEO, you're constantly reflecting on your own style and what you can do differently to be successful, not as an individual, but to be successful for the colleagues and clients that you're lucky enough to work for. My natural style 15 years ago would have been a whole heap more directive than it is today. The landscape's definitely changed. I'm generally trying to find another skill set, if I'm honest. So I'm super strategic. I've got strong commercial acumen, but I'm trying harder to make sure I connect with colleagues, communities, and connect the dots about why we're here. And the why we're here, I think we've touched on, which is, it is a privilege, isn't it, to try and help shape people's financial plans and futures, and to be entrusted with that wealth creation, wealth generation, wealth preservation. That is a serious and important obligation that we run. But all of that creates stories. It changes lives. It helps people. That purpose isn't lost on me and the colleagues inside 7IM. But that definitely has been a clear shift to the more financially numerate-driven CEO that I would have been 15 years ago.
Dean, it's really interesting just hearing you say that, because I was just reflecting on our conversation today so far. And with the possible exception of some numbers about the size of the business, we haven't talked about the financials. We've talked about the people, the clients,
yes,
which I just think, for me, underscores what you just said.
I agree.
Actually, it's in that succeeding together phrase that if we do the right things for our clients, it'll all work out.
I completely agree. We focus a whole heap more than I would have done a decade ago on the inputs, not the outputs. The outputs certainly give you insights and learnings and maybe need for reflection and adjustments, but the inputs are where you really should be focusing your attention to just keep doing the right things. That is definitely the bit I enjoy, the ability to strategically adjust to make sure that those inputs are the right ones is the constant leadership challenge. And hopefully as a result of that, one's running a successful firm. But the inputs are what we focus on, Belden.
I'm going to ask you a question. You may have already just answered it, but nevertheless, what advice might you give to other business leaders who want to integrate purpose into their firm's strategy?
I don't know whether I'm qualified to give any advice. The one thing of which I'm still really pleased I do inside a firm like 7IM is that the leadership team and I would say most days we still see a client at some level. And that is insightful. Whether the feedback is good, bad, or indifferent, you're constantly learning, aren't you, about how that is shaping what you think at the top of the house is directing your strategy, your values, your behaviors. It's a constantly learning exercise. And I love meeting clients. I like hearing their stories. I like hearing how we're helping them. I like hearing about their problems and whether we can help solve them together. Those things, that still gives me quite a buzz. So never get too far removed from knowing what it is that your clients who have, as I say, been good enough to do business with you are telling you.
One of the things I remember from our first discussions come through here is your enthusiasm and excitement for exactly that, for the contact with the clients and the difference that you as a firm can make to what their lives are like. That's really great to see.
When I first moved to a CEO role in a smaller bank in the UK, again, I saw clients very regularly and I like it. It's a treat in a leadership role if you get those interactions. And look, there's many things of which we have to do and we're responsible for, but you've also got to recognize that the best insight comes from those people that do business with you.
Dean, it's been great to have you back. Perhaps in another few years, we'll have a chance to kind of revisit and hear what the next stage has been.
If you don't know anything about us, come and talk to us. We're still a young, vibrant business that's on a growth trajectory. And, it's good to cover a range of topics with you today, Belden.
Thanks so much for joining us.
Thank you very much.
Thank you for joining us for this episode of The Purposeful Strategist. In addition to being available on our website, you can find us on Apple Podcasts, Spotify, and Google Podcasts. If you enjoyed this episode, please do follow us and leave us a 5-star review. It helps others find the podcast. Thanks again, and join us soon for the next episode of The Purposeful Strategist.